Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, the White House says Apple will commit to spend another $100 billion on domestic manufacturing.
Plus, we speak with AMD CEO Lisa Su on the back of the company's earnings.
And Bloomberg reports OpenAI is in talks for a potential insider share sale that would value the company at $500 billion.
Extraordinary valuations. I turn my attention to the companies that are already public and already reporting earnings, Ed. And actually, I'm on the downside. They're all in the red at the moment. Quick whip through what AMD is up to. Down the worst since October 2024. This is the China concerns, the idea of when we're going to see MI308 actually getting into the hands of Chinese customers. Not enough clarity. We dig into that with Lisa Su a little bit in the show because remember, the earnings did beat on expectations, 32% growth in revenue. I'm looking at Disney also beating, but again, there is a concern perhaps around age-old entertainment, movies, about TV that didn't manage to live up to expectations, held back some of those profitability growth targets. We're looking at Disney off by 3%, Uber also off by 2.4%. It too beat. It too actually said they're going to be due $20 billion buyback, but they're going to have to invest in autonomous, and maybe that's the insecurity here, Ed. But what do you got?
Okay, let's get to that Apple news. The stock's actually just come off session highs, but it's on track for its biggest jump since early May. $100 billion in additional investment in US manufacturing and supply chain. But here's the thing, that's all coming from the White House. So let's get out to Washington, D.C. and Bloomberg's Tyler Kendall, who joins us from the White House as we wait for, I guess, the Apple side of what's happening. But Tyler, what do we need to know?
Yeah, hey, Ed. Well, the White House says that this $100 billion investment pledge is expected to go towards a new manufacturing program that would, in theory, bring more of Apple's supply chains to the U.S. And the official says that this brings the cumulative investment from Apple to $600 billion because, as you well know and mentioned, this builds on a previous $500 billion pledge from the company over 4 years. But with that pledge, we saw some really specific investment angles, including that some of it would go towards building a factory in Texas that holds AI servers. Part of it would go towards 20,000 jobs in the U.S., really focused on training as well as research and development. Now, our reporting indicates that while this investment is substantial, it likely falls short for the full production shift that this White House really wants to see. Though it is worth pointing out, 24% of Apple suppliers are based in the U.S. already, the most of any country. Still, we'll have to see if it's enough for President Trump to perhaps give some sort of a reprieve when it does come to the company. We know that the CEO, Tim Cook, has been lobbying for some sort of carve-out here, considering that earlier this year, President Trump had threatened a 25% tariff, Ed, if Apple did not move production to the United States.
Amid all of this, of course, is that threat on Apple exclusively, but also there's threats on higher tariffs for India, where they've been shifting some of their supply chain to, Tyler. As we know, it is incredibly difficult, if not nigh on impossible, for them to really bring production of the iPhone to the United States. Do you think that that's starting to curry favor or at least appreciation in the administration?
Right. Well, today we saw really an escalation when it did come to India, right? President Trump now posing an additional 25% tariff over India's imports of Russian energy supply, which would bring the tariff rate on that country up to 50%. They're expected to be stacked on top of each other, that additional rate to go into effect in the next 21 days. So we'll have to see if there's some sort of negotiation that happens here. It is clear, though, that the administration is going to like this investment. The White House is already out touting it because they really want to start to see these funds coming in. And if you look at all the unique deals perhaps that we've gotten from our trading partners so far, a lot of them do ultimately have to do with investment funds. And the second thing that I'll also put on your radar is that we are expecting those sector-specific tariffs to come down soon. This administration has said we could see them as soon as next week when it comes to chips, but really important to keep in mind that the Section 232 investigations, yes, are into semiconductors, but they're into the entire supply chain, which means that we could really see some wide-ranging impacts.
Thus far, $100 billion extra commitment adds $120 billion in terms of market cap to Apple on the day. Tyler Kendall, we thank you. Let's check in on other companies now. Earnings, Disney, lower after the media company reported third quarter revenue actually coming in about slightly below expectations, but highlighting strength in streaming, in the parks business. Bloomberg's Felix Gillette joins us for more. Look, they were ever so slightly amiss in terms of general revenue growth of just 2%, but it really seems to be the old school part of the business that let them down.
Yeah, the traditional part of the business in terms of, the movie studio, the cable and broadcast channels are all, continuing to show decline. And that, has been offset somewhat by the growth in streaming and parks, which have been very strong.
Felix, streaming is many parts, but listening to Bob Iger on the call, sports, I just want to recap his position on ESPN because I think it's worth discussion. Listen to this.
We're building ESPN into the preeminent digital sports platform with our highly anticipated direct-to-consumer sports offering launching on August 21st, and our just-announced plans with the NFL that will expand ESPN's programming and content offerings for fans.
August 21st, not far away. Like, how big a piece of the strategy is sports and streaming in combination?
Oh, a huge part of the strategy. I mean, they want to grow their advertising revenue in streaming. To do that, you need live events. There's nothing bigger in live events than the NFL. This deal with the NFL that they announced today, NFL gets a stake in ESPN, and ESPN gets control of some of the NFL's media properties, including the Red Zone, NFL Network, and also, crucially, we'll get more NFL games as part of this package. That's huge. It's going to help them in terms of growing their advertising business. And at the same time, they announced the deal today with TKO's WWE, the wrestling network. They're going to get a bunch of big live events, including WrestleMania. Again, that too is going to bolster this new ESPN product and get more people watching it at particular times, which will help them with advertisers.
Is there going to be any regulatory concern around this, about just the big getting too much bigger in the world of sports?
I mean, yeah, I think that this is going to have to get regulatory approval, as we've seen with Paramount. That can cause a lot of problems in this current environment with the Trump administration. So that is a concern. But I think, what they're trying to do is, again, just build up, they've been talking about this direct-to-consumer ESPN product for years now. This is a huge launch. It's been a long time in the making. And to come out with news that you're going to have more NFL games, more WWE, I think that's what they're trying to drive excitement around at the moment.
Felix, you learn when you cover technology earnings in particular, sometimes it's what they don't say that drives stories. And I'm sorry to even ask this, but what's the latest on Bob Iger? Like, is he going to be there forever and ever, infinity, or do they have some plans in place for what happens next?
Yeah, I mean, the succession issue with Disney never quite goes away. It's been the focus of investors for a long time. They botched it the last time Bob came back. They have to get it right this time. There's been endless speculation about who that's going to be. It looks like the internal candidates are really getting narrowed down. But, again, TBD, that's all next chapter of Disney, and they have to really stick the landing this time.
Welcome to our global audience across Bloomberg Television and radio. We're joined by AMD CEO Lisa Su, and it was such an interesting quarter to look back at data center in particular. CPU strength, not just accelerators, strong AI outlook on accelerators, gaming, PC, and then some concern about the future of the China business. But Caroline and I, Lisa, have talked for quite a while now about AMD as the best performing chip stock so far this year. I wondered if we start by just asking what in the quarter changed for AMD? What the kind of biggest move forward was, do you think?
Yeah, absolutely. So first of all, Ed and Caroline, great to be here with you. We always look at these things and say, when we have a business where all of our businesses are actually performing extremely well, it's a good place to be. So we had a very strong first half of the year. Second quarter up 32% year over year. We're guiding to a third quarter, up 28%. And underneath that, what you see is, first of all, data center business is doing extremely well. Our server CPUs are continuing to gain share in cloud and in enterprise. One of the things that we're seeing with AI is the AI investments from the largest hyperscalers are actually pulling, both GPU and CPU revenue, which is good for us overall. Agentic AI actually requires lots and lots of compute going forward. We're also seeing strength in, PCs as well as gaming. Our products are extremely well positioned, whether you're talking about, consumer or commercial. And then we're also seeing, some improvement in the embedded side of our business, as that is also going to I would say return to growth in the second half of the year. So we've seen a lot of positive signals over the last 90 days in terms of what the market needs from computing and sort of the investment things. There are some questions about China, of course, which we can certainly talk about.
Well, let's talk first about the AI accelerator outlook, because actually from analysts to investors to the developer community, when we say that you're coming on the show, we get questions from all quarters. You had said that the AI accelerator business will grow to the tens of billions. And what I'm kind of seeing is people just want granularity from you, Lisa, a little bit. Like, when does that happen and where does it happen? And you talked about the hyperscalers, but what's the growth pathway to tens of billions in accelerator revenue?
Yeah, absolutely, Ed. So let me give you a few important markers. So what we said is the second half of the year, our growth would be primarily driven in the data center by accelerators. We launched a new product just in June, the MI355 product. It's extremely competitive. We really like how we stack up in terms of total cost of ownership for inferencing and training workloads. Customers really like that product. That's driving some of our second half growth. And certainly when we talk about our sequential growth into Q3, that's being primarily driven by that accelerator capability. And now when you extend forward, I've said that the AI TAM for accelerators in data center will be over 500 billion over the next couple of years. We expect to get a large portion of that new accelerator TAM, and that's how we get to tens of billions of dollars. Very key is also, we've accelerated our roadmap, and so we are on an annual cadence. And next year, we'll have yet a new capability with our MI400 series, which will bring full rack level solutions, which will be another giant step forward in terms of capability for AI solutions. So I think that's the roadmap and path for the next couple of years. We're really excited about the traction. We're getting lots of customer validation saying, hey, you're on absolutely the right path. And we're making strong progress towards those goals.
Lisa, the granularity that was demanded time and time again on that earnings call with analysts was around China, though. And I know it's so hard to give because in many ways, this MI308 is dependent on the licenses from the US government. But how are those discussions going with the US government? How quickly do you think they can get through the backlog?
Yeah, Caroline, definitely. Look, I know people always want precision, and what I will give you is exactly how things are playing out from our standpoint. I think we've seen an improvement over the last 90 days. 90 days ago, we did not expect to be able to ship to China because of some of the regulations. I think this administration, the Department of Commerce, the government has actually been very open to trying to find the right balance between national security and ensuring that we have U.S. AI technologies proliferated across the world. So we think that's a great balance. We now know that we have a number of licenses that are under review. We've been given good indications that those are moving through the review process. And we will certainly inform everyone when the licenses are granted. But given that it's hard to predict exact timing, just given all of the things that are in front of the government at the moment, we thought the right thing to do right now is just say, hey, let's not include that in the third quarter revenue. But even with that, we're growing 28% year over year, which is, fantastic growth rate. And if you asked me, what we've learned in the last 90 days, we've learned that the demand is even stronger in the second half of the year than we necessarily, thought maybe just a few months ago.
And analysts really corroborated and thought it was right that we should see such caution perhaps and not show up in the numbers. But Lisa, I'm interested in the inventory that you had been very clear about, the $800 million knock on the fact that you couldn't access China for a while. I know that most of those manufacturing hadn't been complete, but do you think you can unwind that $800 million? How much do you think can you bring that back to bear?
Well, we certainly expect that once licenses are approved, that we will, restart our supply chain and, get those in place. We do have, a bit of time that it takes to complete those, but we would expect to be able, to ship some of those products as licenses are approved. And, again, the exact timing will depend on when licenses are approved. But I, again, would hope that we don't get caught up in, something that I would say is moving actually in the right direction. And really see like the overall business is doing extremely well, right? When I look at data center growth, when I look at client and gaming growth, and really the return to growth in the embedded, those are the key aspects to really, understand about where the business is today.
Lisa, the final question that we have on China, if I may, is something that we've also discussed quite often with NVIDIA and Jensen Huang, which is the idea that in the interim period you just outlined, China's domestic chip makers have made some progress on their own accelerators. Does AMD make an assessment of that, of how performant a comparable Huawei or other Chinese accelerator is relative to the MI300 family?
Ed, of course. I mean, look, it's a very competitive market out there. At the end of the day, everybody wants AI computing. Like AI computing is the foundation for, all the great things that we know that AI can add to, businesses and, sort of the overall, capabilities. So yes, we're always looking at the competitive environment. That being the case, I think we are well positioned. Overall, our roadmap for the rest of the world is very strong, and we think it's just getting stronger as we go forward. And as it relates to China, it's something that we have to work through with the administration. But as I said, we've had very close conversations, and we're making good progress there. So from that standpoint, I think the overall competitiveness of our AI roadmap has never been stronger. And we're excited about what we can deliver across, AI GPUs, as well as, our CPU franchise and all of the rest of our portfolio.
This is Bloomberg Tech, live on Bloomberg Television and Bloomberg Radio, and we're speaking with AMD's CEO, Lisa Su. Strong in PC, strong in server, particularly CPU. Is that an AMD capturing market share story, or is that just a rebound in demand generally story, Lisa?
Well, I think it's both, Ed. I think the demand is good. I think the demand patterns are better, but clearly we're very competitive with our products. I think we have leadership CPUs in both server and client. We've shown significant traction in cloud as well as enterprise. And I think going forward, you're going to see enterprise customers want the best solution out there, and that is AMD for computing.
And gaming, Lisa, so strong. I'm interested into the nuance of pull forward, because you said on the call that you didn't see a whole lot of pull forward, of people trying to get ahead of tariffs and price increases. But did you see any?
Very little, Caroline. I think what we look at mostly is not just what we're selling in to customers, but we actually look at what's being sold out at end customers. And what we're seeing being really transferred to end customers is good demand. I mean, people are refreshing their data centers, which is very positive, right? We're in a place where computing is important, and so we're seeing strong refresh cycles on the data center side. We're seeing strong pull through of our solutions in the enterprise, in PC, and then from a gaming standpoint, again, we have a very strong product cycle. So it's always hard to tell exactly what the impact of the current tariffs are, but I would say that that's the smaller part of the impact on our business. The larger part is just strong products, very good traction from customers, and looking at a stronger second half of the year.
A stronger second half of the year where you take some market share from NVIDIA. Lisa, how are you seeing that grow out and the ability to compete with the next range of chips?
We are very bullish on our overall roadmap capability. I think the second half of the year has a number of customers really broadly adopting AMD.
Lisa, I have a question from our audience, if that's okay, a viewer of Bloomberg Tech. And as you know, like loads of AMD employees, your peers, technology industry people want to hear what you have to say. I'm just going to read it to you. Can Lisa please explain. AMD's winning in gaming and consoles, but AI is where the margins are now. What's the plan to make AMD indispensable to the next OpenAI and not just cost-effective alternative, I think, to NVIDIA is what they're saying?
Well, Ed, the best way to say that is for those of you who know us as a company, we execute extremely well. Our roadmaps are strong. We're very excited about all of the progress that we've made. MI300 was an excellent product. MI350 is a big increase above that, and then our next generation is also. And the key for us, if you look at our history is doing what we say we're going to do, delivering to customers, delivering total cost of ownership, and with that, being a great partner. And so from that standpoint, I think you can be very confident that we have a strong roadmap and we're going to execute on it well. And, our largest customers want to have a dependable and, good partner.
It's been wonderful spending time with you, Lisa Su, AMD CEO. We thank you very much. Time now for Talking Tech. First up, SoftBank shares. They're actually higher on the news that OpenAI is set to sell shares at a $500 billion valuation. Insider shares. It's a company, of course, that has a big investment in. But the news reversed an earlier fall in the Japanese company's stock after it reported net income that missed analyst expectations. Meanwhile, the US has charged 2 Chinese nationals with sending it tens of millions of dollars worth of advanced AI chips to China, violating export restrictions. Now, the defendants allegedly sent sensitive technology from NVIDIA, including H100 AI accelerators. Lawyers for the pair couldn't be immediately located for comment. And this mountain-traversing robot dog is causing shares of Chinese robotics companies to climb. Look, the mechanical dog is from startup Unitree. China has been showing off its robotics prowess in a lot this year, including with running and kickboxing humanoids. Ed, a favorite of yours?
Yeah. Coming up, Matt Brumberg, CEO of gaming creation platform Unity, joins to talk about that company's earnings. We're going to talk more about the mobile gaming space in particular and what the dev community has been really focused on. This is Bloomberg Tech. Welcome back to Bloomberg Tech. I'm taking a look at AMD, largely to just recap the conversation we just had with CEO Lisa Su. The stock came off session lows during the course of that conversation, talking about clear demand, particularly from hyperscalers in the AI accelerator market. They do think that they can shift some of that China-specific AI accelerator inventory carry that they had written down. That's one of the responses she gave to you. PC demand is very strong, and they're taking market share was a very clear signal. We'll continue to track it. It's bouncing around. A lot going on. Apple continues to push higher. $100 billion additional investment in the US, according to the White House. Later today, we expect to hear more. The stock's now up 5.5%. That's a big jump. Shopify is up 19.5%. It's now become Canada's biggest company by market cap. It is taking e-commerce market share, an absolutely barnstorming print from that company. And then Supermicro is down 21%. Simple story. Told us that in fiscal 26, they would get $33 billion in sales. They previously told us $40 billion. Everyone's going, well, what's going on here? It's just not as strong as they had previously told us. We have more earnings.
Yeah, and we've got more big slumps, actually. This time, let's check out Snap shares plunging after reporting second quarter sales that fell short of Wall Street expectations, Ed. Look, the company blamed a technical issue with its ad buying tools that basically set price points too low. The glitch has now been fixed. But let's break down the numbers of the outlook with Jasmine Enberg. We're pleased to welcome her back, VP and Principal Analyst at eMarketer. This is such a self-inflicted wound, and the market doesn't seem to be, well, forgiving them for it.
Yeah, absolutely. I mean, it really was a dismal quarter for Snap. And even before it reported its earnings, I was saying that it wasn't looking great for the company. And that had less to do with the economic uncertainty and tariffs, which, of course, it had warned about at the end of Q1, and more to do with foundational structural issues within its ad platform and its ability to monetize. Now, I obviously could not have predicted that it would have an ad glitch in Q2 that would result in the deceleration in growth. But I think think that really does point to these longer term, more deeper challenges that it has within its business model. I do think in a different context, investors might have been just a little bit more forgiving, though probably not much more forgiving because they tend to be with Snap. But, Snap has been working very hard for quite some time on revamping its ad platform, focused really on direct response. And I think they're getting frustrated. They're getting impatient because the results, while sometimes there's progress, it's mostly been inconsistent.
Yeah.
And then if you take the larger context of Meta and Reddit's blowout earnings for Q2, it makes it really hard for Snap to shift responsibility to macro conditions or headwinds and leaves very little room for mistakes.
I mean, well said. Where they consistently deliver is daily active users. And lest we forget, there's almost 500 million of them. But what's interesting is they're trying to move away, perhaps on the more volatile ad side of it, to subscription. Is that working?
Well, Snapchat Plus has been and continues to be a bright spot for Snap. And one of the things that says to me is that while Snap still struggles to roll out features for advertisers that they like and need, they certainly know how to bring features to consumers that they like and that they're willing to pay for. I do think going forward, diversification of its revenue streams in general is just going to be so much more important for Snap, and Snapchat Plus continues to drive a lot of its revenue growth, especially considering the fact that while its monthly active user base showed really strong signs of progress in terms of getting toward that $1 billion or 1 billion user goal that it has, we saw a lot of weakness in North America, which is Snap's core market and where it makes most of its money. And that also means then that Snap is going to be more reliant on international markets going forward to monetize via ads. And that's extremely challenging, or more challenging, because it's harder to make money there. And again, the weakness in North America points to structural problems.
Jasmine, just real quick, I appreciate what you said about the response investors have to Snap sometimes. Like, I just always remember it either going up a lot or down a lot. But that speaks to lack of consistency. Like Meta showed us that all the stuff they've done around AI shores up the core bread and butter business. Is Snap not experiencing something similar?
Yeah, I mean, I think Meta showed us that you can spend a lot of money on AI if your core business is doing well, and it truly is. I mean, Meta is a powerhouse. It continues to deliver on efficiency and effectiveness for advertisers. Snap has been playing catch up to Meta in many ways, including in AI. It doesn't have the same scale and resources that Meta has to build this powerhouse AI-driven ad business, but it certainly needs to do more work there. One thing I will say for Snap, though, is, we saw an increase in SMB advertising, small and medium-sized businesses. And I do think that is, a direct result of its investments in AI in its ad platform, because these advertisers are generally drawn to places where it's easy to advertise. And that's, one of the impacts that AI has on advertising on these platforms.
Jasmine Emberg from eMarketer, thank you so much for joining us on the program. Let's stick with earnings and get out to gaming. Shares of Unity Software actually now lower by almost 9%. Blink, can you miss it kind of situation this morning, Caro. The stock had spiked after the company reported better than expected second quarter earnings. Something's changed. Let's talk it through with Unity CEO Matt Brumberg. Help me. There was a good response. Like you beat expectations. There's particular focus for you guys in the mobile gaming market. The stock has sort of reversed direction, is down 8%. Matt, your read on that, please.
Yeah, we're not stock investors. We're business builders. So, my answer to that is a little bit of who knows. What we're really focused on is building a growing, enduring business. And I think that when we look back on the second quarter 2025, the history is going to show that it was an inflection point for our turnaround. It was sort of the time when accelerated product development and delivering more for customers started to show up in a really meaningful way in our business. And I think that's basically where we are.
I really appreciate having you on the show. I take a lot of interest in Unity because we recently had Roblox CEO Dave Baszucki on the show of their own earnings. It's probably more analogous in the gaming space to put you nearer to a Roblox. Maybe you disagree. But mobile gaming right now is a huge focus. How is that a driver for your business and a priority for you?
It's the biggest priority there is. We're effectively the operating system for the mobile gaming business globally. 70% of the mobile games in the world are built on Unity, and 85 of the top 100 advertisers, mobile game advertisers, advertise with us. So what we've really seen in the last year or so of this turnaround is that when we make fundamental investments in delivering better product for that set of customers, for the mobile gaming business, that our business is lifting. And we've really seen that over the year, and we're actually really excited about investor reaction over the course of the year as well.
I'm going to go back to perhaps the stock reaction and what our own Bloomberg intelligence analysts have been saying, Matt. And forgive me, it's not always bathed in positivity, because they say, look, there's a sequential decline of your Create segment in the next quarter that suggests muted adoption of your Unity 6 offering. Just describe that. Is that something you're seeing? Are you seeing Gen AI startups?
I think that's just incorrect.
Yeah.
Unity 6 is the fastest adoption of any version of Unity we've ever seen. It's the most stable. It's the most performant. So we've been really, really pleased by that. Again, you're drawing me into wondering about the stock. I would just tell you it's much more likely to be the 100+% run up over the past year in anticipation of what are sharply better results. And again, a kind of inflection point in our business. I would guess that has more to do with those dynamics.
Love that context, Matt. Give us the context of the ad space. And you're encroaching a bit more on AppLovin's space, for example. How do you compete? How are you seeing yourself take market share, or indeed AppLovin still being a really strong competitor?
Yeah, we don't really think about market share in this business. The way this business works is performance-based mobile advertisers buy performance. And they buy against their ROAS, their return on investment targets. And they will buy infinitely across that efficient frontier. So as we deliver more value, customers will spend more money with us, and our business will grow, and that's what's happening. This is a big competitive space with some of the largest, most competitive players in the world operating in it, and we're really excited about our ability to compete, and not just now, but in the future.
Matt, I'd love to end by talking just very quickly about developers and the creator community. Like, one of the big issues in the end market, the App Store, Apple or Google, is revenue split. And just what you're doing to incentivize the creators, but also like bring everyone with you if you're growing at that click.
Yeah, I mean, we are the tools that those folks use to build their experiences and then operate those businesses for years and years in live service. So when we deliver better, more effective tools, for example, to your point, to help them monetize commerce in a native way, for example, and help them acquire users more efficiently, that business grows. So we're a partner in that growth with them.
Matt Bromberg, CEO of Unity. It's great to have some time with you.
Bloomberg's reporting that OpenAI is in talks for a potential share sale for current and former employees that would put the company at a $500 billion valuation. That's the chart right there. The move would boost OpenAI's price tag, according to sources, which was previously at $300 billion. Bloomberg's Shireen Ghaffari broke the story and is with us now. The mechanism actually doesn't even really matter. It's an insider share sale that sets this valuation of $500 billion. But it feels like just yesterday that we broke the story on the last $300 billion valuation. Tell us about the jump. Tell us about what we're hearing from sources is going on.
Yeah, I mean, it's a significant jump in valuation, more than 2/3 of the last price tag. The last round that we reported on, finalized in March, led by SoftBank. Since then, we've seen strong, user and revenue growth as we've reported. But again, this price tag would put OpenAI in a new league as one of the most highly valued private companies out there if this sale were to go through.
Extraordinary how it eclipses even the owner of TikTok over in China, and well ahead of, and close second is sort of SpaceX here in the US. What's interesting is we're getting so many updates to the product itself as well, Shireen. We're seeing how they're getting in, offering ChatGPT to federal offerings with just $1. They're trying to open source a little bit more. Does this just build up the idea that this is going to be the winner?
I think it's still too early to say in the AGI race who, if anyone, will be the definitive winner. But I will say this has always been a rapidly moving field, and I think the past few months have been especially fast. We are seeing new releases from OpenAI this week. We have the open source model that just dropped, and it's widely expected that their more major model update, GPT-5, is coming soon. On top of that, if you look to the left and right, we have Anthropic also released an update to its model, also in talks to have a new round of funding that would more than double their past valuation from just earlier this year. So I think this is really a sign that the AI market continues to grow, and it does raise questions about, are these valuations justified? And I think that depends on how bullish you are on the Gen AI market as a whole.
Shireen, reading your report, there's a lot of detail here. I mean, for one important point is we understand why OpenAI is doing this, right, with the secondary. The timing is because of talent wars, and Sam Altman has this workforce that he has to keep happy.
Right. So as we reported, one of the reasons why OpenAI wants to do this secondary share sale, why it makes sense, is that it gives employees an opportunity to essentially cash out. If you're working at Meta, which is aggressively, by the way, there's this fierce talent war going on right now, right? And Meta has poached several prominent OpenAI employees. If they want to retain these employees, people want to be able to liquidate their shares, and this provides current and former employees a potential way to do that.
Shireen Ghaffari, thanks so much for the update on OpenAI. Now let's get back to the public markets, where Uber is already out with its earnings, but after the bell we get plenty more. Lyft, DoorDash, Airbnb. There is one woman who covers them all, Natalie Lung. You've got a busy day. Let's talk about Uber, because it's actually trading lower. Is that more about how far the shares have run into this, or the worry about sort of the spending or capex on autonomous here?
It's a little bit of both. Definitely, there's a lot of excitement going into the earnings today, which was mostly a beat, but there was a small miss in the core rideshare business by Uber, and that was, really offset by the strong performance of the delivery unit. So there's a lot for us to look at in terms of what it means for consumer spending, and investors was also excited to hear more about the autonomous strategy.
It's a 24-hour period that's like the Super Bowl for Natalie Lung in the gig economy and app-based tech company space. You're super busy, as Caro said. But what always happens, you get Uber and then you get Lyft. And there's obviously some read across. What are the expectations for the smaller of the two?
For Lyft, they're still expected to post double-digit growth in the key metric of gross bookings. And for this quarter in particular, we want to look at the third quarter outlook, because it's the first time they're including the Free Now business, which they completed the acquisition last week. And that will add business from new European markets such as UK and Germany. So that is something of interest for me today.
Talking of Europe and Germany and more broadly expansion there, DoorDash has been making a bit of M&A over in the UK. Its shares have been on a tear this year, up 53%. Where do we expect numbers for that company to go?
Yeah, similarly, on the back of Uber's very strong delivery results, DoorDash is also expected to post nearly 20% growth on that top line as well. Their delivery deal has not closed yet, so might not be seeing those results there yet, but pretty strong spending on the US side is expected.
Let's complete the grand slam, the complete sweep, and do Airbnb. What are you looking for in that name?
Yeah, it's a first quarter where we'll see results from their newly relaunched experiences and a la carte services business, which Brian Chesky has said would add $1 billion in annualized revenue for the company. So we'll see the first results from there, as well as a broader sentiment on U.S. travel.
One question I'd have is, how does Natalie Lung do all of those earnings at the same time? Bloomberg's Natalie Lung, busy evening for you ahead. Thank you very much. Okay, Apple shares are on the screen, and we're pushing towards session highs, up almost 6% now, following the announcement that the White House says the iPhone maker will invest an additional $100 billion in the United States. Bloomberg's senior executive editor for tech, Tom Giles, is here. It's a big number in isolation, sort of, but it's also got to be taken in aggregate.
Absolutely. Look, Apple spends a lot on these types of initiatives all the time. They have already been planning to spend hundreds of billions of dollars in the coming years. The Trump administration likes big, round, big hunkin' numbers, right? And this is a way for them to say, we've scored a victory. We are bringing manufacturing back to the United States. On Apple's part, making these pledges, throwing these numbers out there, and again, these are plans, this is money that they do plan to spend. This is a good way for them to, as BI analysts have said so eloquently, dampen Trump's ire, because they still do have a lot of their supply chain outside of the United States. Trump administration wants to say big U.S. corporations are bringing manufacturing back to the United States. This is the question that we need to ask, and we will be asking in the coming months and weeks, and that is, how much of real production of the iPhone, how much of Apple's high-end products is actually going to come to the United States versus China versus India? That's the real question. Or is it stuff around the edges? And that's a question that we're going to be asking Apple and a lot of other people are going to be asking Apple in the coming weeks.
Yeah, because Tom, the $500 billion thus far that had already been announced, well, that was more about servers. That was actually about training. And that was, in some ways, we saw a little bit of the chunk of change. I think it was about 500 million being allocated to actually sort of rare earths as well. What are we actually anticipating as to how much, if any, can really be for the iPhone?
Right, and some of this is also them committing to purchasing more from U.S. suppliers. Again, this is part of their supply chain. They need these parts. They will be spending this. But will this be creating lots of jobs? Will people be manufacturing, assembling these products in the U.S.? Time will tell. Again, these companies like to, they've already been planning to spend a lot of money, and they're putting lots of big round numbers around them. And again, it's an opportunity for the Trump administration to claim a victory. But if you're talking about server farms, if you're talking about buying from U.S. manufacturers, if you're talking about training facilities, there's a big delta between that and actually piecing together these high-end devices and moving that supply chain out of India and out of China. Look, it's in Apple's interest to diversify their supply chain. No one is doubting that. So much of it is reliant on China, and that really bit them and a lot of other people you know where, during the pandemic, and they really need to kind of diversify away from that.
President Trump doesn't particularly want him only diversifying into India. Bloomberg's Tom Giles, great to have you. Thank you for the analysis. That does it for this edition of Bloomberg Tech. Ed, what a show.
Yeah, and jokes aside, it's a really heavy earnings period still. We moved from the mega caps, but there's a lot of names giving numbers. We're learning a lot about the world of technology. Recap it on the podcast. You know where to find it. On the Bloomberg terminal, as well as online, on Apple, Spotify, and iHeart. From San Francisco and New York City, this is Bloomberg Tech.